I wasn't losing because I didn't know what to do. I was losing because I couldn't do it when it mattered. 3 years deep. I knew what a clean level looked like. I could talk about setups and explain market structure like I was teaching a class, but when real money was on the line, I'd flinch. I'd second guess, or worse. I'd force trades where nothing lined up. Every losing day ended the same. I should have waited. That wasn't it. And deep down, I knew the truth. It wasn't strategy holding me back. It was the fact that I had no structure to trust. After losing accounts and failing countless prop firm challenges, I hit my limit. Not financial, but mental. So I stopped asking, what strategy should I learn next? And finally asked, why do I keep taking trades I swore I'd avoid? That's when I realized I didn't need more information. I needed a framework that forced discipline. Something that I could run every single day. That's when I stopped chasing strategy and started focusing on structure. And the framework that changed everything is the LCE model. Level, confirmation, execution. Here's exactly how I trade now. First, we need to focus on the level. This is by far the most important part. I only mark levels at supply and demand zones, which have a lot of volume and activity. And here's the thing. I will only consider a trade when the price is at one of these levels. This is key. If you were to just open a blank chart, you'll begin to see potential trades anywhere and everywhere. You'll always be open to taking a trade, and this will inevitably result in FOMO and overtrading and eventually tilting. So, the first aspect of our framework is having a clear yes or no filter. I'm only open to taking trades if they're at a supply and demand level, and the trade itself can only be a level-to-level trade, meaning I will enter a trade, then hold it and exit at the next supply and demand level. And that's it. If it's not at a level, I don't consider a trade. And if it is, I'll look for a level-to-level move. Makes it much simpler, doesn't it? Most traders don't fail because they lack information. Actually, you could argue that most traders have more knowledge about trading and strategy than they know what to do with. But what really holds them back is actually executing their trades. So now we have our structure nailed down, which is extremely important in establishing trust and clarity while you trade. Then you can glide to the second part, which is the actual entry and execution of the trade, and that's the confirmation and execution part of the LCE model. The way it works is, the market moves from one supply and demand level to another. So once we're at a level, all we need to do is decide whether that moves to the supply level above or the demand level below first. And we don't want to guess or bet blindly because that'll just give us random results. And random results usually means break even or worse. That's where confirmation comes in. We need something that tilts the odds to one side rather than the other. That's where we can make a strong bet and trade in that direction, because probability is on our side and will be profitable in the long run. For confirmation, I like to use the EMA cloud. This is an extremely simple yet powerful tool. It's just the 20 EMA and the 50 EMA with the area shaded in between. And this gives you a clear read of the overall trend and momentum with one quick glance. You don't need to be out there trying to decipher who's in control and who's not. Just use the cloud. So we have our execution time frame and our higher time frame. The higher time frame cloud will tell us who's in control because the trend on the higher time frame is the stronger trend and will usually trickle down to the lower time frames. So we want the higher time frame cloud to be either sloping up or down. And that will tell us that either buyers are in control or sellers are in control, and that it's very likely to continue moving in that direction. We definitely do not want a flat cloud. That tells us that no one's in control yet, and that means price action will be more choppy and random. Remember, we don't want our results to be random. We only want trades that have a very high likelihood of working so that we'll be profitable. And that's why the cloud is so important for confirmation, because it tells you at a glance whether the market is worth trading or not. So we need our higher time frame cloud to be trending, and this will usually be 3 to 5 times larger than our execution time frame. And I'll tell you the specifics of what I use in a second. But once we see that our higher time frame cloud is trending, we can zoom in to our execution time frame cloud and see if it's trending as well. Now, the cloud on this time frame doesn't need to mirror the higher time frame cloud perfectly, but we just need to know if both of the clouds generally agree. If one cloud is the opposite of the other, like for example the higher time frame is up, but the lower time frame is down, then it means we'll probably get some chop, or at the very least less clean price action since momentum isn't aligned clearly to one side. Don't trade mixed signals. Those are not the conditions that typically result in a clean move, and you can basically tell the state of the market and what it'll do next based on how the clouds are positioned. But that's for another video. So we want the higher and lower time frame cloud to be aligned, not flat, and that'll give us our bias for the trade. If the clouds are trending up, we'll target the next supply level. If the clouds are trending down, we'll target the next demand level. So now we have a framework in place to know exactly when to trade, which direction to trade, and where to target. compared to a blank chart that already eliminates 90% of the random garbage trades I would have taken. And we're doing it all in a quick and effective way. Now comes the last part, execution. This is where you actually enter the trade and manage it. And this is also where most traders screw up, including me in the past. But don't worry, now we have levels and confirmation. The execution part will go just as smoothly as these two if we do it properly. You typically want to see strong price action in your direction, and then enter around the middle of the level. Now this obviously depends on the context of the trade and can vary, but you generally want to place your stop at the cloud or a key piece of market structure. Then you target the next level. That's it. Let's take a look at this ES chart and see how we apply this method from scratch. This is on the 5-minute, which is my execution time frame. Now, what do we see just from our blank chart? Well, it seems to be trending up overall, but we've also made a couple of highs here that show price is struggling to break above, and it's maybe looking a little toppy. Now let's add our levels. So, this clears things up a bit. We're at a supply and demand level, which means we can look to enter this trade. The price will either go to this level or this level. We just need to figure out which one it is, and then trade in that direction. Then, we can pull up the cloud. And the cloud is clearly trending up. So now our bias leans bullish. But here's the thing. We could unknowingly be at a major resistance level. It could be that the higher time frame cloud is bearish, and we're right in the middle of it, which would explain the struggling of price here to break above. And that means we're more likely to drop, or at least chop around instead of go up. So we want to zoom out to the 15-minute or higher and get a better view. And on the 15-minute, we see that the cloud is also bullish, which is a great sign. The lower and higher time frame align, which means we have a bullish bias and we're looking to go long. So we have our level, we have our bias, and now we enter long. This whole process can be done in quite literally a few seconds. We want to place our stop a safe distance, typically near the cloud. So, right here would be good. Then we just target the next supply level. And that's it. That's how you take an LCE trade. So you don't need more setups. You need fewer decisions. LCE works because it eliminates noise and forces you to act only when the market proves itself. Most traders are trying to predict, but LCE is about reacting to structure that's already there. This will also reduce emotion and a lack of discipline in executing, which makes profitable trading so much easier. A clear framework will essentially solve all trading problems. And if you've ever stared at a perfect setup and done nothing, or worse, talked yourself into garbage trades, I made a free in-depth training video showing you exactly how to trade LCE for yourself. It's time to stop gambling and start trading. Be sure to hit subscribe, and I'll see you in the next one.